Welcome everybody to Trading the Gap. If you're new here, it's good to have you. If you've been here before, welcome back. My name is Mal and I'm a day trader. I have a passion for helping people and for trading stocks. So today I want to talk about how to read candlesticks as well as look at the market and give you some examples in real time. If you're new here, the focus of this channel is to give beginners access to info that I wish I had when I started trading. So let's get into it. We are currently on Thinkorswim, looking at Square, ticker symbol SQ up in the left-hand corner. This is the 9:30 open on January 15th. And this is what we're going to talk about, how to read candlesticks in the live market and how to determine if the stock is bullish or bearish. But first, let's watch the video and learn how to read an actual candlestick, and then we'll come back to this chart. In this video, we are talking about price action, candlesticks, how they form, and how to read them. So I have drawn some candles here on the chart. On the left, we have two green candles, and on the right side of the screen, we have two red candles. So what is a candle and what does it mean for us as traders? Every candle will tell a story about where price has been and the potential strength of buyers versus sellers. Let's take this green body candle, for example. This green rectangle is called the body of the candle. There are two parts to a candle, the body and the wick. We also have the open and the close. For this green candle, the open is always the bottom. The close is the top. So this candle here tells us that it opened here and it closed here. The green body of the candle tells us that buyers were in control. On the second green candle, the open is also here, but the close is right here. And these two candles are both green, but they tell a very different story. On the first candle, we see that the close is all the way at the high of the candle, signifying that the buyers are very strong and were in control for the whole time. On the second green candle, the body is very small, even though the travel range is the same for both candles. The second green candle has a large wick. This wick, just like the body, also tells us a story. So what is the story of the wick? Well, let's learn to read the candle. The open is here, represented by this white line. The close is here. Because this wick is here, the wick is telling us the story that when the candle opened, it was very small and looked something like this, and buyers stepped in. And buyers stepped in, they were buying. At one point in time, the body of the candle looked like this, going higher, and got all the way to the top. Then, the story that the wick continues to tell is that sellers stepped in and started pushing the price lower. And as the price went down, this green wick was created to let us know that price was recently here, thus leaving a wick and closing at this white line, making a small green body. This tells us that buyers were in control for a portion of the candle, but sellers stepped in to push the price lower. And the same thing for the red candle. The red candle is a little bit different, where the open is always the high. So the open will be represented by this white line here, and the close is right here. If the close of the candle is lower than the open, the body will always be red. And if the close of the candle is higher than the open, the body will always be green. How strong the buyers or the sellers are at any particular time will be shown by the close of the candle. So again, we opened here. Sellers stepped in, immediately started pushing the price down, got all the way to here, and at one point in time, the candle looked like this. It was a full red body. And then buyers decided that it was a good time to buy. The price of the stock was reasonable. They stepped in and pushed the price all the way up here, closing that candle right there. This is telling us that buyers and sellers are fighting over the price of the stock. The last candle all the way on the right opened right here. Let's take a duplicate of this. It opened here and it closed right here. And because the body is very large, this is telling us that sellers were in control the entire time while this candle was forming. Now, these candles can be on a 1-minute chart, 2-minute chart, 3-minute chart, 4-minute chart, 5-minute, 15-minute. You get the point. Daily, weekly, monthly. I primarily trade on a 1 and 2-minute chart, and the selection is made right up here. Can come right up here, and I can pick whichever time frame I am most comfortable trading. Now that we know how the bodies form and who is in control at that particular time, let's take a look at the price chart. All right, so now that you have a good idea of how to read a candlestick and what it tells you, let's come back to that same chart of square at the 9:30 open, and I'm going to zoom in here, and I'm going to zoom in quite a bit so we can talk about exactly what is happening. So this gray area here is the pre-market. This break of the gray and the black area, this break right here is the 9:30 open. That's when the New York Stock Exchange opens. And just as a quick disclaimer, I just want to throw out, we're looking in hindsight. The market is currently closed at the making of this video, but for the purposes of this video, we're looking at the on-demand feature of Think or Swim, which means I can go back in time and replay any particular day. So this will allow me to pause the market and to be able to understand it a little bit better. So here we go. The market opens, and of course the open is always right here. That's when the market opened at 9:30, and we have our first candle. So learning to read this candle, the candle is green, which is signifying buyer strength, right? So we know that currently buyers are in control because of how big the body of the candle is. So let's keep watching. This is a 1-minute chart, so every time a candle opens and closes, 1 minute goes by. So a candle will close every 1 minute because we're on the 1-minute chart. As we watch the market play out, I'll talk a little bit about trading, where the good setups are. But before we learn setups, we need to learn how to read candlesticks. So the first candle opened here. Let's go back to my line tool, and it closed right here. So there's a couple of things I want to talk about. Let me pause this. So what I want to talk about is, we know where the open is, and we know where the close is. We also know we have a very small wick on the bottom. But one thing in particular I want to touch on is right here. You see how the candle closed right on its highs? It was going up, and there is no wick, meaning that the candle, the buyers were in control almost 100% of this candle. In fact, the buyers are so much so in control that it closed right at the high. This is a symbol of extreme bullishness, or buyers being in control. There are lots of buyers coming in. Second thing to note. All right, so the second thing is, I see this wick. Now, normally I don't trade this zoomed in. We need to look at the overall picture of what's going on. But to understand how to read the market and to understand what candlesticks actually tell us, I wanted to zoom in here pretty good so you could see. So let me zoom in one more time. All right, so the first candle opened here at 9:30, right? Here's the open represented by this white line. We know this. And it closed here. So this symbolizes extreme bullishness. The second thing I notice, second candle opens here, and it actually gaps a little bit from the close of this candle. So that's the second thing. It's telling me that because of the gap, we actually have lots of buyers stepping in. And of course, you can also watch the volume, which I don't have displayed here, but we'll talk about volume in some of the other videos. Volume is a great indicator of what's going on the chart. The other thing that I'm looking at, you see this yellow arrow here pointing right to the tail? This symbolizes bears stepping into the market, right? Or profit takers. If we're buying here, we're to take profit, we have to sell. So this represents bears. Bears are the sellers. So because this wick is so small, this is telling me that there is a lot of buying pressure. The body is still green and it has a very small wick. So this wick is telling us that buyers rejected lower price of the stock. When the candle opened, it opened here. We know that. And it almost instantly pushed down right to this area here, right where the wick stops. And then instantly, it got bought back up. So this is telling us that there is rejection of lower prices. So let's continue. Let's watch how this plays out. Now you see a little bit of struggle of power, right? The candle was green, bulls were in control, and bears stepped in and pushed it down. So now we have a struggle for power. And the whole time we're watching the market, we're asking ourselves, who is in control? The third candle opens right here, pushes down a little bit more, right? And then what's it doing? It's getting bought back up. So buyers are stepping in and pushing the price higher. Sellers are trying to push the price lower. And we see this play out. And this is great because this is on a 1 minute chart. So every minute a candle closes. I hope you're starting to get the picture here. And this is what traders look for. Not this zoomed in, but they look for these types of setups. All right, so I want to pause it right here. So there is a good trade coming up. And it actually broke out. But this is what's known as a breakout. So if we draw a line, a good way to think about this is if we draw a line from the bottom here to the top, then we have a retracement right to here, right? We come up from the bottom, we come up, make a high, we pull back, which is normal in the market, and then we're getting ready to break out. So if we break the top here, I'll put an arrow there for you, right here. If we break that top, this would be considered a breakout. Now, not every breakout works. There is nothing in trading that works 100%. But breakouts is what I like to trade. So if we put a line, and this is exactly why this white dotted line is here. If I remove this, that white dotted line shows me how close we are to breaking the high of this candle. So what I'm looking at when I'm trading it is this green candle symbolizes extreme bullishness. Then we get a small red candle, but it's almost a doji. This is showing me that there's a lot of indecision going on here. The wick is large up top, shows us rejection of higher prices for the moment, but it doesn't close very strong. If there were a lot of sellers coming into the market, the body would look something like this. And this whole thing would be red, right? So then you could say, oh my God, look at all the sellers. This I wouldn't trade. But because we have a small body, relative small body compared to the candle before it, right? We have a very large candle. Then this red candle, which represents the sellers, is about a quarter of this green candle. The next red candle comes in, is about roughly the same size, showing us indecision. So both of these two candles are not even half of this large green candle. So it took 1 minute for buyers to push the price from 68.54 all the way to 68.80. And then it took 2 minutes for sellers to bring it down, not even halfway back. This is telling us, this is putting us on alert for a potential breakout setup. So now that we're on alert for a potential breakout setup, let's delete some of these lines and go through this again. Okay, and I'll leave these two open and closed here. So we know that the high is here, right? Represented by the yellow arrow here. We know that the high is here. And before this green candle ever breaks the high, right now the price is at 68.92. You can see the white dotted line. It just makes it a lot easier to read. Before we break the high of this red candle, we're on alert for a possible breakout. So I'm already thinking if we break out, nothing is guaranteed in the market, but if we break this high right here, I would be getting into this trade. So before we get into the trade, we need to know where to place our stop. If you don't know what a stop is basically, it's short for stop loss. And all that a stop loss means is if I'm wrong, where do I get out of the market? The market always does whatever the market wants to do. We can't control it. The best we can do is have a defined entry, defined stop, and a defined target. And if I'm wrong, if the market decides to do this and it goes down here, and let's say this candle wasn't green, but let's say this candle was actually red. Let's say it comes up here and then all of a sudden it triggers a sin, and then all of a sudden the next candle we get is red, right? And I'm in here with 1,000 shares and I'm buying here. My stop is here. So I only plan to lose 20 cents worth, right? And I'm in here with 1,000 shares, which puts my risk at $200. But let's say I don't put a stop because I'm not sure how to use stops and I don't like stops, and the market puts in a giant red candle and then it puts in another red candle. Well, now instead of my planned $200 risk, and a risk is what I'm okay with losing if the trade goes against me, right? So instead of losing $200, now I'm losing $400 plus. So my risk to reward is now skewed. So here we have our entry. Here we have our stop loss in case the market goes against us. And we need to work out our target. Easy way for me to see where my target is going to be is I come down here to the tools, active tools. I take my Fibonacci retracements. Fibonacci retracements measure the retracement from the top, from this top here to this bottom here. So this, the pullback or the retracement, if I was to right click and go to edit properties, it has all these lines. And what people primarily use is the 618 and the 50% retracement. So if I click that on, here's my 50% and here's my 61.8% retracement. So this is another thing that shows a sign of bullish strength. From the bottom here to the top here, the market pulled back 50%. And it looks to be going higher. So a 50% pullback is normal, and that symbolizes strength in the market. So instead of using this as a retracement, I can pretty much visually see the percentages where the market is. But if you wanted to, you could leave this on. Every trading platform has a Fibonacci retracement tool. So what I do to help me visually is 0 is always my entry. So I set it here. And this red line is always my stop. So we know where our entry is. Our entry is here at the break of this high. That's our entry. Our stop is always here. So my risk would look something like this. This is the area that I'm willing to risk. And we are risking approximately, 20, 30 cents? Looks like 21 cents here. So if I go in with 1,000 shares, from the entry to my stop, this would be roughly $210. So I'm risking $200. If I'm wrong, $210. And if I'm right, my 2 to 1 would be up here, and this would be $420. And if we copy this, duplicate, here is my potential reward. And this needs to be green. And this is how traders make money. Profitable traders are not always right, but they're right more than they're wrong. Nothing in the market works 100% of the time, but the idea is if your target is double your risk, you can make good money being right 50% of the time. So let me get rid of these boxes. Let's see how this plays out. I hope you're starting to kind of understand how to read the candles and how to take breakout trades. So let's hit the play button and let's play. So this candle opened here, and instead of going lower, it started to push higher. So we know that a possible breakout is happening. So let's see this play out. See this tail here, this large wick, the candle comes up and then there's selling pressure, pushes it back down, buyers step in, start pushing the price higher, and then sellers come in and push the price lower again. So there is always a struggle between buyers and sellers. But the candle doesn't tell you the full story until it closes. So I want to pause this right here. So we close right here, and we leave a little bit of wick here, right? So the candle didn't close on the high, right? We got a little bit of wick like this one. This one closed all the way at the high, meaning it's very strong. Buyers are in control. We have a little bit of wick here, and we closed, and the next candle jumps from here right to here. So we have a little bit of gap in price, symbolizing more buying pressure, right? So let's continue. And this is how you have to read the story. This, to me, is telling us that buyers are in control right now. And these two red candles are nothing more than profit taking, especially if it took 2 1-minute candles to go down not even halfway of this one large green candle. So here we go. We got a very large top in tail here. This is showing us rejection of higher prices or potential profit taking. So we have to let this play out and see how the candle closes. Remember, the story is not fully told until the candle actually closes. And when you learn how to read individual candles, you can combine them into certain patterns. These patterns is what I trade. Like we've talked about here, the break of this high with the arrow is known as the breakout pattern. Okay, so this red candle, this large wick here, shows us rejection of higher prices. Then sellers step in, push the price lower, and buyers instantly snap it up and push it back up. So this is showing us rejection of lower prices. So we have a tug of war going on. Are we going higher? Are we going lower? We're not really sure. But knowing how to read structure of the market, which we'll talk about in upcoming videos, I know that the stock is currently bullish. So let's continue to watch and see how it plays out. And watching the stock can be exciting and nerve-wracking at the same time. So if you're going to trade, please start with a demo account. You can sign up for a demo account on any broker. If you open a brokerage account, different brokers have different minimum requirements for a deposit. Any one of them should be able to give you a demo account where you can practice with fake money and trade until you figure out how to trade. Okay, so this candle is very, very green and very large, telling us again that buyers are very much in control. And did you notice the break of this high here? This was another breakout pattern. Are you starting to kind of see what's happening? Starting to understand? I hope you are. And here we go. And our target is at 69.31, and the price hit 69.33. So this would have triggered us out. So we risked $200 down here to make $400 if price gets up here. If any of this information was helpful to you, subscribing and hitting the like button will let the YouTube algorithm know that there's quality content in this video. If you'd like to see this video get recommended to more people, leaving a comment will help the algorithm do that. Leave me a comment below. I plan on picking some similar themed comments and questions to talk about in my upcoming videos. That's all for now. I'll see you in my next video.